Good morning. My name is Russ Rogerson. I'm the president and CEO of the Morgantown Area Partnership. And throughout our COVID lockdown times, we've put on many of these seminars, these Zoom seminars, centered around providing key information to our membership and others. Obviously, the PPP program has been a long-awaited second venue of it coming out. Has been a very important aspect to providing assistance to our small businesses to help keep afloat during these challenging times. So we're excited to have Seth Wilson from Bowles Rice and Frank Goldsboro from the West Virginia Small Business Development Center here to present information on PPP Round 2. They are here to give us some good baseline information, but also encourage you all to ask questions throughout. And if you do so, please do via the chat, and we'll make sure that we will be able to get to your questions. So with that, I'm going to turn this over to Frank Goldsboro, our partner at the SBDC, so he and Seth can go through a presentation on the program and then open it up to questions and answers. So thank you again for being here. And Frank, we look forward, and Seth, we look forward to your presentations.
All right, Russ. Well, thanks for inviting us to do this and allow to share this information with your members and others in the small business community. You know, I think you'll see that the SBA has really done a good job in simplifying the process, and it's going to really help small businesses knowing the full rules for the forgiveness part of it up front this time. And I think you'll see that throughout. So, you know, first we have to put up this disclaimer. This isn't legal advice, and this is just really our interpretation of how the rules exist now. And, you know, there are some things that we're waiting for further clarifications from on. Okay. Just to start off, you know, one of the big things in this second stimulus package is they did go back and change some of the rules for the PPP from the first round. And one of the biggest ones is, before, if you had one of the lucky businesses got one of the EIDL advances, you had to subtract that from your forgiveness amount. They took that requirement out, and you no longer have to exclude that from your forgiveness amount. And then the second important one is that now they're allowing you to deduct your PPP paid expenses on your taxes. Before, you know, you didn't have to count the revenue as far as tax purposes, but they were making you exclude the expenses you paid with your PPP funds. So those are the two big changes. In addition, they did open it up to a couple more different organization types. And for this round, you have until March 31st to apply, or until the funding is exhausted. I do think there's a good chunk. This time, $284 billion is designated. Last time it was like, I think 525 was dispersed, but they are limiting it this time too, and you'll see that here. Okay. If you were not able to take advantage of the PPP the first time, but were eligible, you're going to submit this SBA form 2483. And you know, there's big four things to see if you qualify. And the one thing is all businesses for the PPP program have to have been operational before February 15th of 2020. They're still open and operational. They can be closed, but they can't be permanently closed. But some businesses have decided to stay closed on this time, but they are planning to be open. No more than 500 employees, and if you have multiple locations, you can't have any more than 500 at any one of those locations.
And just to be clear, that is for the first draw. If you haven't already had your first draw loan, you can still apply using that form 2483.
Now, this is the one you're all going to look forward to. This is if you're applying for a second disbursement or a second draw. And, you know, and the big thing on this and the big changes are, you know, you have to have used up your first loan. This time they are dropping it to businesses who have less than 300 employees. And this is the big one is you have to demonstrate a minimum reduction in your gross receipts of 25% for at least one of the quarters in 2020 as compared to the same quarter in 2019. It doesn't have to be for the year. You just have to identify one quarter where that was the case to qualify. And they will ask you that on the loan application.
Well, and one of the things that they have done is they have allowed you to short circuit that by just providing annual numbers as well. So if you can prove obviously that your annual receipts were 25% or less using tax return or financial statements, then you don't have to do the quarterly comparison.
Okay, how you determine how much you can get is pretty much the same as it was the last round, except this time they are allowing those in the accommodation and food industries to get 3.5 times the average monthly payroll instead of the normal 2.5 for everyone else. Okay, and also if you're a seasonal employee, they do, or if your business has not been open a full year, right in the instructions, they give you lots of flexibility in those cases. So seasonal employers, they did really make it a little bit easier this time as far as you selecting what period you're going to use for the determining the cost. Okay, well, what can you spend these funds on? I sort of did this, thinking everybody's going to be wanting to get full forgiveness. So as long as you spend a minimum of 60% on your eligible payroll costs, you're good. And that includes, any compensation you pay to your employees, any cost to you that you paid for your employee benefits. And, and of course, if you included owner's compensation in that, you can count that as well.
And if you have any highly paid employees, it's only the first $100,000 of compensation. So if you have anyone making over $100,000, that excess over that $100,000 threshold is excluded.
Right. And they did clarify, especially if you're using a cover period more than 8 weeks, owner's compensation is capped at a maximum of the 2.5-month calculation. Employees, you can sort of go the whole full 20 weeks of full compensation, but owners, they did cap that at 2.5 months if you use a longer cover period. Okay, now these are the non-payroll expenses that you can spend the funds on, and again, a maximum of 40% of these costs are going to be allowed for forgiveness, and the ones on this page are the ones that were already existing before this last package passed. Those are your mortgage interest payments, your rent or lease payments, and your utility payments. Any of those that was already in place and you on February 15th of 2020. This slide here are really the ones they've added with the new round of funding. What they did is now they're letting you use operational expenses relating to your business software or cloud-based computing services, and they're very broad. If anything doing with your human resources, inventory, payment processing, they're really letting you count those costs because some businesses, if they pivoted from what they were doing before, had significant costs trying to do business in a different way. The big one here is supplier cost. This was definitely excluded before, but now you can count any of your vendors that you were using on a regular basis just to supply your inventory or other goods that you needed for your business. Also, you can count PPE expenses and any expense related to becoming COVID compliant. If you had to put up the little plexiglass barriers or other modifications to the business to become COVID compliant, they are allowing you to use those expenses. And the final one is property damage costs for vandalism or looting related to public disturbances that weren't covered by insurance. So those are the big ones that were added and are new this time. Okay. Basically the forgiveness terms really haven't changed a whole lot. And it's really been this way from the beginning. They did reduce some of the payroll versus non-payroll percentages. But, as long as you spend at least 60% of these funds on your payroll costs and no more than 40% on the other expenses we just talked about during the cover period, you can plan on full forgiveness for that. Now, one of the things for loans of 150,000 or more, you still have to demonstrate that you maintain your employee and compensation levels during the cover period. Because if you didn't, there are reductions. Okay. I wanted to add this here because a lot of people are thinking, they've loosened and really simplified the process, but what they've done does not equal blanket or automatic forgiveness. You still have to file for forgiveness on each of these loans. I think the big thing that they've changed that's going to be helpful to business owners is you no longer have to provide all the backup documentation for every single, you were essentially providing the whole audit trail before they made these changes. This time around, you're still saying you have all that and you're certifying that you have that, and you do have to keep them on record for, I think it's 4 years for payroll, 3 years for non-payroll, but they're leaving it out there that they can come back and verify that you have that document. There's really 3 different forms that you can use for forgiveness, and do make sure you're using the ones that came out on January 19th and not a previous version. But this SBA form 3508, that was really the first forgiveness form, but they sort of changed things. But now this is you only use this if you have a loan more than $150,000 and you need to account for a reduction in FTEs, or you had that reduction in salaries and wages by more than 25%. The only thing I want to add here, if you did not change a person's, like say, rate of pay, but you work them less hours, don't ding yourself twice. You only have to count the reduction in FTE, because really if you didn't change what they were making per hour or what their actual salary was, you don't have to worry about the reduced salaries.
No, that's exactly right. And the 25% is an important threshold, because you were able to reduce salaries up to 25% without any reduction to the forgiveness.
Okay, the EZ version. Again, this is loans over 150,000. You did not reduce the annual salary or the hourly wages by more than 25%. Okay. And you can say you did not reduce the number of employees or average paid hours between the first of 2020 and the end of the cover period, or you were unable to operate during the cover period at the same level due to compliance with COVID-19 guidance or regulations. Okay, this is going to be the application the vast majority of borrowers are going to be using, and it's the SBA form 3580S. And this is for all loans $150,000 or less. And the big change is, like, now you don't have nobody in that category has to calculations for the salary. That's the big thing. Okay, That was the last. Did you want to add anything, sort of wrapping up the PPP? I just want to touch base on a couple of the other things that this did beyond the PPP.
Yeah, I'll just give a couple wrap up points. So this time around for the second draw, the loans are capped at $2 million. That was a reduction in the cap amount. As Frank said, the vast majority of people will be well under that amount, but it did cap the loans. And, I think just in general, these seem to be moving pretty promptly through the system. And we're not having the kinds of delays and questions that we had the first time around. I think more people had an opportunity to prepare. The portal has been changed and is, I think, a little bit more user friendly. The banks are reporting that that it's a simplified process. There are a couple instances where there are some issues going on that may cause some delays in getting applications submitted, approved, and funded. There is if you have a pending application for forgiveness from the first draw, even though you're eligible to apply for a second draw, those applications, there have been some trouble submitting those applications if there is a pending application for forgiveness on the first round. If you look at the guidance that the SBA has given, it does not indicate that those forgiveness applications need to reach a final determination before the second draw can be approved and funded. But the portal itself is, there are some issues submitting those applications, and I know that there's some back and forth about that going on, and also I think the portal seems to be a little touchy in terms of some of the things. I had one bank client that was telling me that there was a comma in the name that the first application they submitted, they did not have the comma before LLC, and the second time they added the comma and it got kicked back because the name didn't match and they had to resubmit the package. So there's things like that are going on that may ultimately end up being kind of a delay, but by and large, we're not seeing sort of the mass chaos that there was with the first round. And we may have some bankers. I saw Zach pop on a little bit ago that he might be able to give some feedback too in terms of what he's seeing, but that's kind of what I'm hearing from the field.
Okay. Yeah, my clients who have gotten, they said it's gone pretty smooth so far without delay. Okay. All right. I did want to talk about this. One of the other major programs the SBA rolled out to sort of help provide capital to struggling businesses was the Economic Injury Disaster Loan program. And this was sort of existing for other types of disasters, but they really tweaked it specifically for COVID. They recently with the last bill, they extended the application period till the end of this year. And these are considered working capital loans. So really on the proceeds, what you can spend them on, it's really, you can spend them on your normal operating expenses that you already had. You can't consolidate that, but what's making these really attractive to people are the terms. It is a 30-year, 3.5 fixed rate, 2.75 if you happen to be a nonprofit. You do have to pledge your some collateral if you're borrowing over $25,000. Your first year to payments are deferred. Your interest still accrues from when you sign, but the payments are deferred for 1 year. And these you don't go to your bank. These you apply directly for at the SBA, and the payments come directly from the Treasury to your bank account. I want to talk about this because people sort of got excited because we did think they were going to open this up for people who weren't able to take advantage last time. But they have clarified that that's not going to be happening because the way they wanted this to work, they have, with the funding they received for this, the people who were either didn't get the full amount last time or applied, but, didn't get any funding because the funds ran out. You're still in consideration for this, but there are some specific criteria you have to meet. And one of those is you have to be located in a low income community this time and demonstrate a 30% reduction in the revenue for an 8-week period beginning on March 2nd of last year or later. We're still expecting further guidance about this program, but everything I've read, if you qualify for this, the SBA will be contacting you to sort of have you prove the 30% reduction in your gross revenue. So I was hoping I was going to say that's going to be reopening, but it is not. Okay, I wanted to bring the employee retention credit up because, previously, if you had taken out a PPP loan, you were specifically excluded from taking advantage of this credit. And what this is a significant refundable credit. For 2020, they've sort of gone back and changed the rules a bit, and we are waiting guidance from all those businesses who didn't think they qualified because they took the PPP out. But you're going to be able to go back and file amended 941s and to claim those credits if you were eligible. And if your business suffered, if you qualify based on the 50% or more reduction in your gross receipts, you're going to benefit the most because you really get to keep taking this credit for every quarter until your sales return up to like the 80% level, I believe. And, and new this round, and the IRS has not updated their website as of yesterday on this, but they did announce, 2 more quarters for this coming up in 2021. And they're actually increasing the amount of the credit. Instead of for the year, you get it per quarter. Instead of 50%, you're getting 70% of qualified wages. But I want some businesses who especially are getting that because of, significant reductions in revenue to have your accountants and take a look at that, because I believe that can provide some important cash flow back into the business when normally you would just be paying it out. Okay, debt relief. Now the SBA, I just saw a procedural notice they issued a couple days ago. This round included additional payments for people with current SBA loans or approved before 9/27. You don't have, as long as you got your approval, you didn't have to close, but as long as you got approved before September 27th, you're included. But, the first round, all these programs got 6 months of, principal and interest and fees paid for them. The hope this round is that each of those is going to get an additional 3 months. The newer loans who didn't get anything the first round, they want to give a full 6 months to. And there is language to provide additional months to if you're located in a low income community, but the SBA has already figured out that they're going to run out of money. I think $15 billion was allocated for this. And so I know they're trying to come up with a number of how much more they need to fully fund this as the legislation would. Okay. And that's really all I have to share. You want to add anything to that, Seth?
No, before we open it up for questions, I guess I would just say, as we noted in the very first slide, all of this is subject to change. Anyone that remembers going through the first round, we were getting new guidance, it seemed like every week, and some conflicting guidance. We won't, I don't think, have that level of change going forward. This is a very streamlined program, and the eligibility requirements have been tightened up a little bit, so there are less people making application this time around than there were the first time. but we still can anticipate some changes and some additional guidance, I think, as time goes on and as some of these questions arise. And so we just note that this is a snapshot in time, and that things may change as we get a little further along and get closer to March 31st and beyond.
All right. So do we have any questions? Anybody like to have a question? You can enter it on the chat, and we'll make sure our two experts cover it.
Softballs only.
So Seth, I'll ask a question just based on having gone through this once before. You see this being a better streamlined, you mentioned that, but an easier process for businesses to work their way through.
Absolutely. The paperwork is drastically reduced. Even folks that are over that $150,000 sort of streamlined loan process, if you're basing your payroll numbers off of 2019 and you've already, supplied that information to the lender and you're using the same lender, you don't have to, kind of regurgitate that information. So the application is much more streamlined. Paperwork's easier. And the portal, it seems to be, I'm not in the portal, but from everything I can talk to, every banker I've talked to, it's just an easier process all the way around the board.
So,
and I'll add, Russ, I just think people will be able to plan better and use the funds in a more beneficial way this time, because most of the things we know now this time around, and we know we can, have a cover period that, either 8 weeks, or we can end it anytime before 24 weeks. The first time you had to either a cover period that was 8 weeks or 24 weeks. This time they're allowing you to decide anytime between the 8 and the end of the 24 weeks, which will help, especially if you can apply for that retention credit.
Excellent. Well, we do have a question. It's on the chat for everyone, so I'll go ahead and read it. The first round of PPP had a federal acquisition regulation credit clause. It will require a government contractor to refund or reduce billings that have properly qualified for loan forgiveness, essentially forcing them to repay the loan through such credits. Does the second round of PPP have any such provision?
I actually don't know that quite. The answer.
I don't know that. Is there a way I can see the question?
It should be in the chat for everyone.
Okay, there we go. I'll move it over here.
Let's see.
So you stumped the experts.
Stumped the experts right off the bat. I said softballs only. I meant it.
So David, we'll let's do this.
I haven't encountered that, to be honest with you. That's the first I've ever seen that.
We will get you an answer to that question.
Yeah.
I've got the guidance up here, and we'll get you an answer to that question.
Yes, we'll get you an answer, and I think we have your email as part of your registration, David, if I'm correct. So we'll get that back, or we can broadcast it to the answer to the entire group. So we also have another question. Can you confirm if nonprofits have a 1-year extension through tax year 2021 of a provision that allows single people to deduct up to $300 and couples up to $600 in charitable gifts, even if they don't itemize?
Yeah, I did hear that as part of this, because normally to be able to, to take the charitable contributions deductions, you have to itemize. They specifically are going to allow, and I guess I didn't know what the amounts were, but you will be able to deduct qualified charitable contributions this year without, even if you don't itemize your deductions on the Schedule A. I have heard that and read that.
So any other questions? We all will qualify by saying you should follow up with your financial advisors and attorneys or whatever is necessary. But certainly the SBA, we're fortunate to have 2 offices here. Frank has his office downtown, actually in our building on 238 High Street. And of course, Seth Bowles-Rice, they have himself and a team of people. And so don't hesitate to reach out individually as well. Any other questions? Those are a couple of good questions. All right.
Yeah, I'm anxious to look into that first one. I just have never seen that, to be honest with you.
Yeah, well, we have a number of.
Now, I did read something, and it may have to do, like, if you read the certifications, I think there is a clause in there about, trying to use American-made products. It may have to do with that. But we'll find out who asked that and get further clarification.
Absolutely. Absolutely. Any other questions from our participants? Okay, well, don't let that stop. You see here information to get a hold of both Seth and Frank. Please follow up with them or other folks. This is very important that you do understand the rules and the regs and the ups and the downs, but in order to get this assistance. And so we're very pleased to be able to host this and thank Bowles-Rice and the SBDC for bringing this information forward for us. So once again, we'll post this and we will, you'll be able to review it or share that with others that you may be in touch with who may benefit from this presentation. With that, we're going to close this session, and I want to thank everyone for participating and to our sponsors and our presenters. So thank you so much.
All right. Thanks, Ross.
Thank you.